Hey, what's going on, team? I hope you all ended the week green. Just real quick, though, I wanted to make a video about the shop play today. That's SHOP, ticker Shopify play today that was called out in chat. Despite it not being on the watch list, I want to detail exactly what I saw and why it had potential to run to make a $22 move today. This is another A plus setup. So once this trigger was broken here today, I knew that it was going to run. It had big potential to run. And let me just get into it and I'll show you what I mean. So we are looking at the 1-day chart here, and we can see that Shopify has previously had a nice run up and some consolidation here between these two levels, which is the 360 level and the 380 level. Okay, so run up and a little bit of consolidation. Actually, this 380 level can be drawn back to here. So like understanding that old support, right, becomes new resistance, like it makes sense why it would run up to this level and then consolidate a little bit before making another move up. So understanding that 380 was the resistance and 360 was the support, I told the team earlier this week to go ahead and set straddle alerts at both of these levels. And once either side was broken, it was time to take a serious look at this ticker and possibly get in for a trade. Another thing to note while I'm on the daily chart before I jump into the smaller time frame is that once over 380, the logical resistance here was like right around 390. Every time in the past that it had been broken over 380, you can see it's just been bouncing in this range here. Right, so even over 380, I was like, okay, where's our next resistance point? 390, and sure enough, look at right where we ended up today, touching to the top side before coming down. Market is still open, so it's still trading. But I'm going to jump into the 5-minute chart and give you a little analysis here. So we opened at around right around 370, 371. And immediately pushed up $10, right? Straight, let me just move this line a little right down to 380. Okay. So yeah, we had opened up, touched 380, made a $10 move and touched 380 and came down. My alert at this point had not gone off. But when it did go off, there was this massive volume. If I zoom in more, you can see there was a bit of consolidation, and then this massive volume came in and just pushed up right through that 380 resistance. This is a big deal because going back on the daily chart, you know, we had not broken that point with that much resistance. Well, one time last week, but we closed way down here. So, you know, we wanted to make sure that if we had broken this level, we're breaking through with big volume. That's a strong indication that, okay, buyers are interested and this is where we're going to head up. Oftentimes, though, when you break a major resistance level, especially on larger volume, you have profit takers here at the top. And then you have depleting volume here as the stock consolidates and tests this old level of resistance, which is 380, as a new support. Okay? The market does not forget this. So at this point, I told the team that 380 was the bounce to take a position. I'm going to go ahead and just bring this over here so you can see. I said, Shopify, here is your 380 test as support from the top side. Just alerting that to them and understanding that 380 was holding here with a large volume push through the resistance. And if you want to get technical, we can call this a bull pennant forming right there at the top. This thing, everything about that was just saying, okay, this is going to grind higher. Right, so there's no reason why, with those three things in combination, for anyone to that saw this play not to take it, okay, not to assume that risk, because what you can do is just wait for that dip entry right at the 380 mark, enter as close as you possibly can to the old resistance, new support, and then set your stop loss right here at 380. You know, so that way this is a low risk, high reward play, because remember the top side resistance in the past has been 390. Okay, so right after I had alerted the team to take an entry around this area, we had this nice push up again on larger volume. This candle unfortunately didn't close at the top side. It did consolidate a little bit, but the volume came right back in and pushed it up again. So on this initial spike, those contracts, the 13 December 380 call contracts ran for a 40% gain right here on this pop. That's plenty to take profits off of. But understanding that 390 area was resistance, holding through on those same contracts would have yielded a 200% gain from $4 to $11.90 is what those contracts ran from. This is just a textbook A-plus setup using volume, pattern formation, and support and resistance to determine a high probability trade. I mean, every single dip here after we broke through that resistance was bought up right up until the end of day, where we just started to sell off. I mean, it is Friday, so that's expected. We made our $10 move and some after we had broken this resistance level. A $22 move from 370 to 392 overall. Okay, so that's all that I have on this play team. I hope that I was able to shed some light on how I use pattern analysis in combination with volume and support and resistance areas to determine an A-plus setup. If you haven't already, hit the like and subscribe button for me so that you get alerted when videos like this are posted and made. We do a live stock analysis every Sunday where we go over tickers for the watch list on Monday, as well as nice setups that are forming into the week. So definitely you want to be there for those videos and tune in. Thank you for watching, and I hope that I will see you all in chat. Have a great weekend.